Hello, everybody. Welcome to this webinar brought to you by M Equities in collaboration with Bursa Malaysia. And this webinar is managed by our company, Wealthford International, Sdn Bhd. So today, our webinar title is One Glance is Worth 1,000 Words. So welcome to this session. Now, allow me to briefly give you some overview of the session. Now, I'm sure that if you are a newbie, you may often catch yourself making some mistakes when it comes to trading and investing, whether it is panic selling or hiding out in cash or trading frantically during a volatile market. So new investors often make these mistakes that can hurt our portfolio in the long term. So to avoid these painful mistakes, so we are bringing you this online workshop, okay, by the head of retail research, Mr. Lew Chee Hao. So this workshop aims to provide an overall idea on how the stock market behaves and how we can benefit from it. So in this 1 hour session, we'll talk about the stock life cycle. We'll do an introduction of stage analysis. We'll give explanation on trend transition and how do we apply stage analysis in the stock market. So before we bring upon the head of retail research, Mr. Lew Chee Hao, we would like to invite Ms. Kelly Tan to do a short presentation on investing with M Equities. So over to you, Kelly.
Okay, thank you, Shen. Hi, everyone. I'm Kelly from AmInvestment. Okay, today I would like to share with you regarding the product and services provided by our AmInvestment. So first of all, this is some award and winning by M Equities. So okay, the next is the for our service. We have a trading service and financing service. So for trading, we have a characterized trading and also foreign investing service. For financing, we do have a discretionary financing and share margin financing. So for our product, we have a characterized trading, which the online brokerage you can see from here, 0.4% is for the value below 100,000, and the 0.2 is for the value above 100,000. So this is a trading limit we will give 3 times of cash and 2 times of share. Settlement will be on T+2, and this is a trust interest for the trust account. Okay. Next will be the foreign investing. So for our platform, we can trade in up to 12 foreign exchange. And this is our M Elite membership program. So for the existing client or new client, if let's say you want to become an M Elite member, you have to trade minimum 20,000 brokerage per year to entitle for the M Elite member. So for M Elite member, they can enjoy like 5-level market steps and also exclusive pass for event and seminar. And also you can view the news like the Nikkei market. So if let's say you are interested to become an elite, you can always contact us. So we also have this trade and be rewarded program is ongoing until this year December. Besides that, we also have this trade with your buddy. So this is a campaign which if let's say you refer your friends or family to open account with us, right, you have a chance to win up to 500 deposit into your trust account. This campaign will be ongoing also until this year December. So after for the client, if let's say you sign up with us, right, we have this online workshop for client also. And we also have an intermediate and advanced booth camp for our client. Okay, if let's say you are interested to open an account, trading account with us, you can always contact us. This is our contact number. Ian Nasir is my colleague, and my contact number is here also. or you can always call to our help desk or email to our help desk if let's say you have any inquiry or any problem. Okay, that's all from me, Sean.
Yeah, thank you so much, Kalin. Alvin would like to ask, can we trade Taiwan market?
Yes, we can, but currently for the Taiwan market is only for offline order.
Okay, that means they have to call up your reminders, yeah, or dealers to make the transaction.
Yes, correct.
All right, so hope this question has been adequately addressed. Yes. All right, thank you, everybody. So we'd like to move on to our session today, which is one glance is worth 1,000 words. And to do this session, I would like to invite the head of retail research, Mr. Lew Chee Hao, to conduct this session. Okay, so Mr. Lew, how are you?
I'm good. Kelly, can you let me share my screen? Yeah. Okay, let me share my screen first. I'm good. Hi, Shane. How are you?
Yeah, I'm good. Thank you so much. Good to see you again after a few years.
It's
All
been
right,
a
so
while.
over to you.
Thanks, Shane. Hi, good morning, guys. I'm Chee Hao. Maybe most of you don't know about me. A little introduction about myself. I'm the head of retail research in AmInvestment Bank. So I'm the licensed analyst, currently under equity research team. For me, I in charge the technical research, all the technical charting, buy point, sell point will be under me. As for today, just a sharing session about one glance is worth 1,000 words. Basically, it's some basic strategy that hopefully that can help you guys, or a sharing session for you to how to control your risk management, especially in the so volatile market. Okay, as usual, we'll go through a disclaimer first. Okay, first of all, for us, we also have our own fundamental team and technical team. I believe most of you will be understand why is a fundamental. Most of fundamental is they are looking for the company accounting estimate, valuation. In fact, they will generate a price. It's called intrinsic value. What's the fair value of the company? While for technical analysis, basically we study about the price action, where's the demand and supply. That's a main objective. So in my opinion, I always advise and suggest investor that try to combine both of them if can. And because technical analysis basically can help you to navigate the gap between the fair value and the market price and give you a proper investment strategy. For today, basically, I will focus on a very basic, even though it's a technical analysis, don't be worried. Okay, technical analysis, like I say, study a price action. They come down to a 3 point. Is a market is always discount everything. Basically, market will factor in whatever the bad news or good news it is, and price move in trend. And historical always repeat themselves. Okay, like now we are in an increased interest rate. Potentially they are pointing that we are entering in the early stage of recession. So time to time we have this financial crisis, 2008. Then we go back even further, we have financial crisis, Asia financial crisis in 1997, and dot-com bubble in 2000. Then 2008 is a financial crisis, and 2 years ago we have a COVID crisis. So all this while is history will repeat itself. So by hopefully, let me introduce this stage analysis to help you to guide you how to view the market. And I use this analysis in my daily job, to pick the stock that are in the stock on radar. I write stock on radar every day. So the objective is right now by using this analysis skill is very simple to knowing what stage a stock in a specific time. For example, what stage of your stock for the glove is right now, for the technology stocks right now. Okay, if you see the chart plainly, you see there's a sideways, there's an uptrend, and sideways and downtrend. If we break it down, actually share price, especially equities, they have their own cycle. So we can use this stage analysis basically to study what kind of cycle of the current price is moving. And bear in mind that this is a key point. The cycle of the price of the share price actually is very closely moved together with the fundamental of the company. So as I say, in my opinion, my philosophy on investing, I always like to combine the fundamental and the technical, because it will better you use both of the upside then come out with a strategy to help you in the investing world. So 4 stages basically separate to a 1, 2, 3, 4. Okay, 1, 2, 3, 4 and 1, 2, 3, 4. The sequence will be follow 1, 2, 3, 4. It won't be a jump 1 to 3 or 3 to 4. Okay, but there's a little bit tricky. I will share with you later. So stage 1 basically we call it the consolidating stage. Stage 2 we call it the advancing phase. Stage 3 we call it the topping, and stage 4 we call it the declining stage. So this is an example of clearly a share price moving in the 1, 2, 3, 4. Now this is stage 1, then we start moving up to stage 2, then stage 3 and stage 4. To define more definition on them is stage 1 consolidation. Basically, when you go into a consolidation, the share price actually move in a sideways fashion. Sideways fashion basically the share price is moving like a rectangle. Okay, so we are not going anywhere. You will start in the between, let's say 1 ringgit and 1 ringgit 20 cents for a very long time. This is what we call the consolidating stage. Then advancing basically is a clear uptrend. Okay, usually you can see a clearly defined by the higher high or higher low, like a staircase pattern going up. And we can use other indicators to help, for example, like moving average line. This will help you to identify which stage of stock. Then stage 3 basically is a topping, we call it. Basically, when the share price moving in the stage 3, number 3, the volatility basically is increased. Volatility means risk. When you have a higher risk, basically the share price will movement much bigger compared to normal. They swing much more up and down. And stage 4 basically is a declining stage. And this pattern is like the opposite of a vice versa of advancing stage 2. So it's a series of lower lows and lower highs. It's like a going down state. Okay. So as you see, sideways trend will like this example. This is all the Bloomberg chart. So basically, you see the share price nearly 25 to 40 cents, not going anywhere, and it's oscillating around its 200-day moving average line. So usually we use 200-day moving average line as a long-term guidance. Okay, I'll talk a little bit about moving average line later. Just a brief. And stage 2 basically is an advancing stage. Okay, share price start to moving higher to moving average line, especially a 200-day moving average line, the long-term 1-year moving average line. Define higher high and high low as you see a share price usually moving higher high and high low like a staircase fashion. Then the topping basically is we call the top. It's a dangerous movement. Basically, you get your sell signal when the topping phase is over, is happening. And later I share with you how to see the trend transition to help you guide why you should invest now and why you should invest that. You shouldn't invest that. Okay. Compared to stage 3, compared to stage 1, basically they are similar, but the swing is higher. So basically, it will show you they are more volatile. And stage 4 basically is a back signal, which means the share price is selling down. Trading below is moving average line, especially the 200-day moving average line stand for the 1-year moving average line. A series of lower lows and lower highs that you can see like a staircase. Okay, the key point come here is after knowing 1, 2, 3, 4, 1, 2, 3, 4, consolidation, uptrend, top, then declining is always focused on stage 2. For our strategy wise, including every day the stock I pick in a strong radar, we also only focus on stage 2 or the early phase of stage 2. Try to avoid stage 1 and 3 and 4. Okay, simple. 1, 2, 3, 4, 1, 2, 3, 4, the cycle, always focus on 2. When you see the share is on stage 4, don't buy. If you see a share price in stage 1 and stage 3, maybe you wait. Okay, I will explain more. Because this is a breakdown, we go into a trend transition, what we call. Okay, trend transition, before we start about trend transition, we need to talk about the tool that we are using. We use moving average line to identify this 4 stages, stage 1, 2, 3, 4, to identify whether the share price is moving in the uptrend or moving in the downtrend. Is really depending on the moving average line. Most common moving average line don't be complicated using what kind of day, which day, what's your indicator. For me, I always focus 3. Okay, long term we use 200-day moving average line. Mid term we use the 50-day moving average line, and the short term we use the 20-day moving average line. It's simple. 20-day moving average line basically stands for 20-day business day, 20-day working day, 20-day Pusa day. Pusa day are open. So minimum are like 1 month, indicating a short term. 50-day means 3 months, 3 quarters, 50 days working days. And 200 candles, 200 days, basically we use it for long term, 1 year. If you are a shorter term pattern, or you are looking at more precisely entry point, usually we are advised using 20 and 50-day moving average line. So this is an example of moving average line that you can see from the chart right now. The light green basically is a 20-day moving average line, and the black color is 50-day, and the long term is a red color. So if you use the shorter duration, like 20-day, 1 month, basically they will hug the price, we call it. It's a lagging indicator, but we just need to use it to identify what's the current trend of your particular share, okay, of your particular individual shares. Some of the definition that you will see in the moving average line is we use it to define the price trend. For example, if past 1 month, past mid-term moving average line, 50-day moving average line is around doing 1 ringgit. Right now, your share price is doing 1 ringgit and 20 cents. So basically, they give you a picture that 1 ringgit and 20 cents actually outperformed the past 50-day moving average line. So it's outperformed right now. So your share price could be entering to the bullish trend. And longer term trend, usually we use the 200-day, the price will be higher. We also use moving average line as support and resistance. I can explain much in today's session about support and resistance. Basically, support is the level that you can see there's a demand coming in. So for example, some people like to use a psychological level, 1 ringgit, 1 ringgit and 20 cents, 1 ringgit 30 cents will be a support. When the level drop back to 1 ringgit, there's some buying demand, for it the support. So moving average line also give you a support, because when people identify past 1 month, let's say you use 20-day moving average line, for the past 1 month it's been doing 1 ringgit. Right now your share price actually doing around near to 1 ringgit and 2 cents, 1 ringgit and 3 cents, then basically retrace back to a support, give you a better accumulating price or level. Watching the slope of the moving average line. So imagine your moving average line is counted by everyday closing. So the first 20 days, when you have a 21-day closing price, you use day 2 and 21 day and add on together to become the average of 20 days. So if you day by day, your closing price close getting higher and higher, eventually your slope of your moving average line will turn up. This is how we use it. If you turn down, basically it's a bearish signal. The other method we use is we use to trade with a moving average line. We compare the shorter term and the longer term. So when the shorter term cross below the longer term, basically we call it a dead cross, indicating a bearish signal. But if your shorter term is crossed over the longer term, we call it a golden cross. Okay, this is all the basic. Basically, you can Google it, or get investor media, you can get all the definition. But without knowing this, basically you can't perform the stage analysis. Okay, this is an important slide that telling you that why stage analysis actually linked to company fundamental. From a fundamental perspective, the cost of the share price is always linked to the company earnings. Even though for our past 10 years in the stock market, in the industry, you see actually the price cycle actually is safe, is tally, it should be tallied with the company earnings cycle, the probability. If you see the chart from here is also stage 1, 2, 3, 4. Okay, let me give you an example. Take it as an Apple, US Apple, the one that with iPhone, with iPad, MacBook. When Steve Jobs haven't created the iPhone or iPod, the stock actually is in the stage 1. Okay, stage 1, what is stage 1? Basically, the share price is a sideways fashion. So they are still doing, Steve Jobs and the team is still doing a lot of R&D, try to come out with product to take some share from Nokia or Samsung or Sony Ericsson when went back 10 years ago before the smartphone is coming in. So after they take very long time, the share price of Apple usually trade in the fashion of stage 1 until iPhone is created, people like it, they can take over the old traditional market shares, and eventually the share price could potentially break up to stage 2 because you have a positive surprise. It can come to innovative products, it can come to a more better pricing product, regardless what kind of business or what kind of company you are. Okay, and when the iPhone is selling very good, big expectation, then you have the stage 2 will continue. You have the post-price model. When post-price model, then the fundamental analysts try to write any more cover Apple, for example, then they will increase their earning per share, estimate, revise up, then the stage 3 is coming up. This is what we want. We want this earning per share momentum. So by combining fundamental and technical, you try to spot the counters or spot the shares. They have this earning per share momentum. They are growing and their numbers is coming in. This is what we want. We call the growth stock. But to a certain level, for example, Apple, there's a lot of competitor coming into the market. Oppo, Xiaomi, for example, then Samsung, Huawei. Then eventually the market start to saturated or getting lesser market share, then the share price could potentially move back to stage 3. But if one day the sales is not doing so well, iPhone sales is not doing so well anymore, they potential loss of earning per share momentum, the share price will move from stage 3 to stage 4. Even worse, some of the company, let's say the expectation of the earning expectation is not met. For example, is below expectation, they have a negative surprise, then the share price start to move stage 4. So by knowing these are 1, 2, 3, 4, 1, 2, 3, 4, you roughly will know what kind of counters is doing good, what kind of counter is doing better. Because by using stage analysis, it's not applied only for individual stock, but they also can go for sector, go for industry, go to segment. Okay. This is the theory behind. Okay, for the transition stage 1, okay, as I mentioned, usually this is the time they are not doing very well until they can research something out. They are very outperformed, or the industry there's some very positive surprise or very strong demand for the industry. Then usually you make it. The surprise they make it to a stage 2. We call it the earning momentum breakout. And some company, even though some time to time from like 2015, 2017, 2019, we have a technology trend, for example, a few years ago. And even now, the 5G is coming in, the EV is coming in. So most of the sector of the stock back to a few years ago, actually they are doing very well because they have a very promising business outlook and they have a strong new management team, for example. Then the share price will start to move from stage 1 to stage 2. So again, the key point to remember here is always focus on the stock they are doing in the stage 2 or the earlier stage 2. Or some of the companies suddenly attract notice with a big earnings surprise, a big estimate. For example, instead of they are doing 1 million now they are doing 5 million in profit, or this kind of surprise. And usually you see the demand of the share price. Now, this kind of stage 1 and stage 2 is not created by a retailer or it's not created by others. Usually we try to aim the one is buying out. It could be potentially is all the institutions player. Those the fund manager, those the mutual fund. When they are buying in, usually they're buying a lot. They can't be one day finish their position. They need time to accumulate and then buy. and eventually they look for a longer term view, not like retailers investor. So we more like we are following them to try to spot what's the stage 2. Okay, what the next transition will be a stage 2 to trade basically is earnings start still increasing, but they are rising in a smaller percentage. Okay, instead of going go big, but to the certain level, your company earning actually start to slowing down. Then potentially you lead your share price move to the top. And stage 3, when performing stage 3, some is changing him from strong buyer to the one. What does this mean? Which means those they are entry early, especially fund, now they are taking profit. Okay, and smart money basically indicating an institution money, institution player, the fund manager that bought early now is taking profit. They will make the share price to swing. So stage 1 and 3, the differences is stage 3 usually a swing much more bigger. Okay, that's the key point. And eventually the company start to lose its earning per share momentum, and earnings start to slow down or even negative mis-earning estimate. You start to see the company moving in from stage 3 to 4. Some of the reason example will be, you can take a look on glove counters. Usually you start to see the momentum slowing down, especially the earnings part. Then the share price will cause the share price go back to a stage 4. And stage 4 usually is coming like a greater competition in the marketplace or the product oversupply, and this will cause the earning model generally rise downward. So once your earnings model is rise downward, basically you make the share price going down. To look at it, basically we use moving average line. And after that, after stage 4, usually company will go back to lackluster, which means they are not very happening. They are not surprising. Logically thinking, after the share price perform 1, 2, 3, 4, after 4 is what? Is 1, back to the cycle. So after the sharp sell down by the institutions player, okay, usually the company need a lot more time to fix their problem, fix their production problem, for example, fix the market oversupply problem. So stage 1, back to a stage 1, even though he will rebound, but if you investing in the stage 1, basically you are telling you, actually most of the time they are not bottoming. Some of the blind spot for the investor is they will assume after the decline of stage 4, they will assume a V-shaped rebound. It will happen, but probably it's not so high. After a sharp correction, basically share price will enter into a huge consolidation, because fundamental view, your earning is slowing down already, and you want to back to the glory time. Basically, you need time to give the company management to do their job. For example, come out another better product to competitive. Then take some time, usually more than a year. Then when it back to a stage 2, they can turn around so fast. Okay, the key point is how to pinpoint stage 2. First, if you see a clear stage 2, basically you see a clear uptrend, higher high and higher low in like a staircase pattern. Secondly, we usually use 50-day and 200-day moving average line. As I say, 50 days stand for the quarter view, 200 days stand for the 1 year view. So imagine your share price is doing above 50-day and the 50-day above 200-day. The sequence has to share price above 50-day, then at 50-day was 200-day moving on, basically telling you the share price is moving outwards like a staircase, okay, going up. And both 50 and 200 actually trending up. Why the moving average line will trend up, as I mentioned just now? When your closing price is getting higher and higher on average, basically your moving average line will point upwards. Okay, it's just that simple. And sometimes you see the volume coming in when there's a big update, and when there's a correction, actually the volume is contraction. It's not much, then shouldn't be so worried. So this is the idea how to pinpoint stage 2, the early of stage 2. Basically, you clear to see, okay, this is clearly stage 1. Take this example, okay, the share price is around right hand side here, okay. Let's say this line is around 140 cents, okay. But here in the early of 2016 March, they start to pay more than 140. Always ask yourself this question: why all of a sudden this share price is always doing below 140 cents? Then right now people willing to pay more than 140 to purchase this share. Okay, you want to go higher to 150, 160. Okay, demand of the share is always confirmed by price action. As I mentioned, technical is a discount mechanism, which means every good news or bad news they factor into the price. We don't receive insider information altogether. Okay, but somehow people will understand the information behind inventory, or some fund manager that are looking out at the prospect of the company, they start to buying to create the demand. This is the time that we start to looking at, instead of paying 140, why people willing to pay 150, 160 for a share? Okay, that's the question that I always ask yourself. And you will see crossover here, the blue cycle here, eventually entering to the stage 3. When you're stage 3, you're moving average line is like stage 1 is swing a lot sideways. And clearly you see there's a rectangle here, up here, and eventually it start to cross below the moving edge line, as I draw in the red cycle, indicating a warning sign, and eventually you go back to stage 4. Okay, some of the tricky part is, although I mentioned that stage 1, 2, 3, 4 is always the sequence, and you are back to a stage 1. But sometimes if you go to a stage 3, instead of 1, 2, 3, back to 4, you need to see which way of breaking up. If it's breaking higher instead of lower, then this stage 3 is no longer a top. Okay, it's back to stage 1. It's just a resting for the past 3 months, and eventually go higher from here. Then usually will give you another buy signal. And stage 3 can change back to stage 1. After stage 1, what you expect? You expect stage 2 is ongoing. Okay. Then you go out here until stage 2. What's the next stage of stage 2? Will be 3. When you're back to 3 that time, then you see where's the breakout. From this example, let's say you break lower, moving average line, then this will tell you this stage actually is stage 3. When you expect this stage 3, you immediately will think that the next coming you is likely to be a stage 4. Okay. This is how we analyze the general market in a very fast way and do our screening. Another method is base count, we call it. Okay, base count is something although I always emphasize that you try to invest in stage 2 or early of stage 2. So as long as still in the stage 2, I think it's investable for me, because eventually stop loss is put by yourself. For example, whatever price you're getting in, you just put 10% of your stop loss to protect yourself. Okay, as long as the stock is still in the stage 2, then it's still a buy for me. Okay, which means it's trading above the 50-day and 200-day moving average line. But sometimes we use base count to see how's the whole rally is moving out. A lot of people are misunderstanding a technical analysis that this technique is going to be a very short term, going with intraday. For me, it's no. Actually, it's just a study which stage of the company is doing right now. Most likely, if you tally with the company earning, tally with the company prospect, for example, EV, for example, all the cousin sister stock move together. Okay, cousin sister stock move together means let's say, for example, if let's say is a catalyst on a exporter play, then most of the exporters should move together. Many years ago, there's an exporter play on a furniture counter. Then you see all the market leaders such as Lee Hen, such as Bohua Resource, they will move together. And eventually you wait for the company earning, they will see the company is actually killing almost same. They are doing much better. Q on Q up 25, more than 25%, year on year up more than 30%, similar like that. Then you have the group of company. When you're investing in the group of company, basically and they are all performing in the stage 2, and basically you are lower down your whole portfolio risk. Okay, that's a key point. And base count usually is 1, 2, 3, 4, 5. There's a 5 base, but most of the time they have 3 base. Okay, what I need to know is let's say this is stage 1, we call the initial stage. When you just break out, it's entering to stage 2. You see the green moving edge line, black moving edge line, and the red moving edge line basically stand for 20-day, 50-day, 200-day moving edge line. So they never go lower than, especially the 50-day. Okay, 20-day may could be because sometimes the share price will a bit soft. So every time share price to move like they don't move like a rocket. Okay, they move like a climbing mountain, like you're climbing a KK mountain. So you climb, and halfway you need to take a break. So when you take a break, you build a base. Okay, we call it base. So base count 1, 2, 3. After base 3, only buying in will indicating, telling you that your risk is much higher compared to stage 1 buying in. It's that simple. But as long as a stage 1 initial stage or base 1 and base 2 you are buying, actually is, I would say, it's still quite safe. And eventually, for the whole journey, you see the share price rally is the only time they are deep below this 50-day moving line is almost 2 years. So technical, basically, you can spot the multi-bagger stock, at least 2 to 3 bagger stock easily by using stage, as long they are performed right, doing the right earning spread. This is how we use stage analysis. So sometimes you see there's a breakout we think is a continuous movement. If you use some classic chart patterns, will tell you a breakout of a triangle, breakout from flat pattern, breakout from a panel pattern, whatever it is, high tie flat or power play breakout. But all these come to the summary is which stage of the company, because theoretically, if the company is going in the fast momentum, earning prospect, until stage 4, until base 4 and base 5, basically their earning could potentially start to slowing down. Yeah, this is how we view it. Another example is here, primary base breakout. Then usually a base is like climbing mountain. You're taking a break to form a base. A good base usually is 2 to 3 months time, like a rectangle like from here. So instead of break lower, you break higher. So this stage 1, 2, instead of 3, now back to a 2. Okay, sorry, back to a 1. So after stage 1, usually back to a stage 2. Then you have a base. So we want the stock act like a tennis ball instead of eggs. Okay, so any pullback time is not like egg straight away break, then got case. Okay, you expect some of the momentum that like a tennis ball bounce, and bounce higher. Okay, we want a tennis ball as a stock. We don't want an egg as a stock. That's the theory behind. So after this breakout and stage 1 is another example, then you can use a simple dead cross, as I explained to you the definition of moving edge line. The dead cross basically tells you the trend potentially over in the near term. This is how it's time for you to get out. And 1, 2, 3, 4, 5. But most of the time you won't see base 4 and 5. Most of the time you are until base 3, it could potentially move back to a stage 3 and to stage 4. Okay, but it's a key skill for you to identify which kind of base is relevant. Okay, use support resistance, a rectangle pattern. Then the base usually don't happen 2 to 3 weeks time. That one is just taking a breather and continuous movement. A base usually starts at 2 to 3 months. And this is another example. And for example, 150 and eventually go higher from here, and then the journey is a whole stage 2. So the key point is always focus on stage 2, even investing in the phase 2 and 3, and I think it's still safe as long as you do a right risk management. Example, having a 8% stop loss or 10% stop loss, whatever share price you purchase. Okay, this is how to keep an insurance. Okay, let me show you some of our in-house coverage on fundamental stock. Like paratransit actually is we think it's quite good because paratransit is two integrated public transport terminal IPTT. They do it like a modern bus services center, and they have terminal Marujaya and Kambaputra Central. For they're located in the Ipoh site. So basically, what about this stock is after MCO, we see a post-pandemic footfall, okay, higher rental rates. So they make it very nice, like a airport model transport hub like that. Okay, instead of they provide a lot of clean toilet, for example. Then whoever wait bus, you actually can go shopping. Then your higher rental rates, they rent out the shop lots, and we start seeing our analysts start seeing a stronger contribution from Kambaputra Central because nearby is the Tar College. Bidu Central is in the construction, going to start. And full year recognition for render actually is doing well. The number is coming in. As I said, eventually, as long as the company got earnings and or strong catalyst, basically you should look at. And we like it because the prospects are very unique, especially with the current volatile situation. A very unique business model type, and they're going to expand their pipeline in Bido, Trono, Alosata. This is a picture or example of Terminal Marujaya and Kambaputra Central. We like it because they can just replicate this successful business model to other places to attract more travelers, especially reopening. Singaporeans is coming into Ipoh, Penang, all this. So chart-wise, it's been moving in the stage 2 for some time, but if you take a longer view, actually now it's trading near to its record high, indicating currently build base right above 85 cents. If you can go higher from here, then we expect more upside from here. Support is around 85 cents, followed by 79 cents. The next one we also like is Power Root. So as you see, Power Root as usual, it's do Ali Cafe, it do Ahpat. The main reason I like was net profit. The latest result, we actually jump Q-on-Q, jump to 1%, year-on-year jump 6.6 times. Basically, they come from a lower base, come back from a pre-pandemic level, boosted by a stronger than expected sales. Revenue also hit high. So you want the business they have profit, they also have a revenue, and revenue is year-on-year up 50%. Strong demand for the Power Root products as well. Domestic and export market, especially there are many export from Middle East market. Export sales also continue to grow. We think because MCO reopening now slowly, we don't even need to wear a mask in the public area. So we think we are in a very recovery zone. And the company the prospect is going to widening their distribution network. According to our management, they still got 5,000, 6,000 untapped potential new outlet for the investment market. Basically telling you they are still growing, they want to grow, and they're going to expand more his product offering in the overseas market. And it's always paid good dividend. If you check back for their record, so far about 6% company policy. Share-wise, is start to recover from the COVID-19 low, I would call it, and we should go higher, but 1 ringgit 80 cents is a future support. Future resistance. Now a resistance turn support. Lately we break out to a 1-year high, indicating a good continuous movement. Sometimes I will use how to identify stage 2. I will use 52-week high. The stock that I make new 52-week high, basically 52-week means 1 year high, indicating they are outperformed 1 year. The demand is coming back for the share price, and eventually I will expect some growing in the future. The third one is one of the large cap TM. Everyone know TM is our infrastructure for the telco broadband. Basically what happened is 5G is coming into Malaysia, and DNB, which is the Digital National Permanent, only give 2 licenses. One is TM, the other one is Yes Communication. So they have signed a 10 years fiber leasing for this 5G wholesale service. So they're going to continue to talk to the telco operators. Telco operators means let's say Telkom, DG, and we see the value accretion from a TMB fiber lease. So they're going, there's a contract, and I think we think the contract is worth some money, and it will give you boost the TM earnings prospect, and we expect the 5G coming in will enhance the TM earnings especially, and to graduate tapering against the subsequent growth in mobile user data usage. TM is our My Digital initiative, the ownership of broadband high-speed broadband, the unified network. So when the 5G coming in, they can go faster phase of growth for its wholesale revenue. And TM1 also is a good potentially be a long-term revenue growth, because TM1 is the only sole Malaysian cloud provider for government data. So overall, the share price has been correction until early of June it started to breaking up, however, and recently they are breaking higher, but because external market start to have a pullback near to 550, but overall I think to a longer term prospect, especially it can recover back to 15 range line, for example, then will be a better entry point for a longer term investment. Okay, let me share with you some of the trading ideas. Basically, trading idea is the stock that I wrote in Stock Radar, that I share my view to my advisor or my clients. So first one is Optimax Holding. Basically, they do eye specialist services. If you go TTDI, this called ambulatory care center. So right now, Optimax are listed 2 to 3 years ago, if I'm not mistaken. They presently have a 13 specialist center. They do treatment for eyes disease and disorder, which is the main one. So we see, because we think that the demand for the eye specialist service is going to grow higher because of the aging demographic in Malaysia. The number of patients are getting better, especially after MCO. They used to have 2 years lockdown. MCO, they cannot do to treat their eyes disorder. Basically, now the number of patients coming in, and this company is going to continue to grow. They call it ACC, Ambulatory Care Center Network, and set out more satellite clinic. So satellite clinic basically is not really a full swing of specialist clinic, but it's still it's a specialist clinic, but it's not like a hospital or not like a care center so big. So they can sell to the suburb area. They can cater the needs for more on the remote area, on the suburb area, instead of they just focus on the city. Long-term growth, recently have MOUs with the Cellgate Group of Hospital to establish eye specialist facility in the hospital. And this 4th quarter, very likely they will transfer to a main market. I think SC approved already. So in terms of share price, is consolidating nicely. After a rally of stage 2, back to 4 and back to 1, recently they back above 70 cents. 70 cents basically a strong threshold. If you can go higher from here, even go higher from 85 cents, then we have a confirmed move for moving stage 2 movement. As you see, for the current situation, as current volatile environment, especially a stock market, try to look at stock. They are only trading above 50-day and 200-day moving chart. So 50-day basically is this green line, okay, the midterm. It's very simple. Just call your broker and how do I set out the 50-day moving chart? It's just one tick, okay? Nowadays, we don't need to do calculation. So because this is the way to help you to control your risk, okay? If the stock is not doing above 50-day moving chart, basically for me, I won't look at it until they recover above it or certain level. And lastly, will be a Synergy. Synergy listed not long ago. They are specialized in surface mode technology manufacturing solution. They do a lot of smart manufacturing, especially we are currently in the lack of foreign labor. So some of the companies, they want to transform into called smart manufacturing. And for Synergy, they are commissioned to a new integrated production line, automatic production facility. When they listed, actually, they try to get the IPO. After IPO, they use the capital to expand facility. Is for the expansion. So it's smart factory solution segment compared to taking more R&D and grow and develop his surface most technology. So right now, I would say this counter actually is well positioned in the benefit of growing E&S industry. E&S, they call it the electronics and semicon industry in Malaysia, Thailand, and Vietnam, on the Southeast, especially when you have a US and China trade war, they are still ongoing. Basically, they are benefit us, Malaysia. But the problem is technology sector right now is in a big correction because of increased interest rate, even though their number is still okay, but there's a potential slowing down. So this caused a lot of volatility for the small listed tech stock like Synergy, like S&P, for example. So overall, okay, this chart is very interesting because this is the IPO breakout. What is IPO breakout? IPO breakout means the first buy point when the stock listed already. We use it to spot what's the first breakout. This is the first candle they are listing. So after listing, usually we will take some time for them to discount in the market that way, okay? Then they will form a base, we call it a fade. Then there's a strong long white candle breakout from this high. This high basically is the high ever seen they listed. There's never go above 77. Now it's going around 70s. Then this breakout point. Then this also is a potential view of a stage 2 ongoing. Okay, so moving aside looks good. Green color looks good. So overall right now is in the momentum in the stage 2 time to time. And the number is kicking in. For quarter 2 actually is making way more money. 9 million net. First quarter is 3 million net, I think. Yeah. So overall, hopefully, let's see how the company is doing. Maybe they are in the midst of growing and spending their earning momentum. So conclusion is try to look at stage 2 and avoid stage 1, 3, 4, which is very important. When you have the concept in mind and you can do it with very disciplined, as long as the stock is stage 4, you don't invest. Basically, I think you could have a better outcome from your investment journey. Okay, I think that's all for me tonight. Thank you.
Okay, so thank you so much, Mr. Lew, for sharing with us stock cycle. I think we have learned a great deal tonight, which is now to focus on stage 2. Yeah. So if any questions, ask our speaker today, Mr. Lew, who is the head of retail research of AmInvestment Bank. Please write your question in the Q&A box.
Okay.
All right. So the first question is by Alvin is that if you do trading, not investing, stage 1 to stage 4 doesn't matter much, right? So that's his question.
You are saying doing trading in a very short term, is it? In the intraday, is it? But stage analysis can apply to all the time zone. Eventually, if even you are using hourly chart or mini chart, basically you still can see there are 4 stages. It's just they are more volatile and more forcing. But the goal of investing in using a stage analysis, basically you can get yourself a longer term. So you're less volatile stock, and we try to put the money in the stock they are growing fundamentally and technical. That's the main reason. For me, I think yes, it's still relevant, even you are in a very short term zone. Yeah.
All right. So the next question is, may I know which stage are we right now?
Okay. Year to date, I just did a market outlook. Year to date until now is October 30th of September. Year to date in Malaysia is all in the red, negative. There's only one sector they are positive, year to date up 2.2%, which is financial service. Year to date means 1st of January until today. In terms of indices, in terms of sector view in Malaysia, honestly, we are quite bad, but we are not the worst. If you read our strategy report, actually we are middle of the level. If you look at Hong Kong, Taiwan, and even China market, they are year to date, Korea market, they are year to date more than 20% loss, down more than 20%. So I would say by using a very simple method, you can see the stage 2 at where, which is the financial services, which is also in line to the hiking interest rate cycle. Banking stock is a beneficiary of the hiking interest rate. So yeah, we have only one positive zone in the positive territory, which is the financial services or the banking stock right now. So as I say, when you don't get a big cap, small cap, and you don't get the sector view, now you need to go to industry. You don't even get the industry, now you need to get to the group of the companies. If you take the act 2 months ago, you'll see where a lot of growing momentum is kicking into the new IPO stock. They are listed in the not long ago for 1 or 2 months. Maybe potentially investor view it as a expansion move because they just listed, they're going to expand their move. Most of them, they will have the IPO breakout in the same time. But of course, right now, because of more market volatile, they start to have some retracement. Yeah.
All right, thank you so much for sharing your view. Just now you mentioned about base 1, base 2, base 3, base 4. So next question is your base refer to market level?
No, base usually refer to the support and resistance they create themselves. That's why you need to analyze that. For example, they back to like a rectangle in between their support and resistance level of the share itself. For example, let's say the share is 1 ringgit and it's a support and 1 ringgit 20 cents is a resistance. Then they just swing it between 1 ringgit, 1 ringgit 20 cents. Then very likely you see the base is between 1 ringgit, 1 ringgit 20 cents. So when there's a breakout point of 1 ringgit 20 cents, 122, 123, or 130, then you think there's a breakout continuous movement of this base. Else they will continue stuck in between 1 ringgit and 1 ringgit 20 cents. This is called what we call the base. Yeah.
All right. The next question is by Devi. How do you determine if stage 3 is transitioning to stage 4 or it is changing to stage 1 and the trend is still up?
As I mentioned, for this theory, you won't skip the sequence. It's always 1, 2, 3, 4, 1, 2, 3, 4. The only difference is that stage 3 can back to stage 1 when instead of breaking lower, it break higher. So take back an example. Let's say your base is between 1 ringgit and 1 ringgit 20 cents. You identify it's a stage 3. Your stage 3 will only confirm when the share price dip below 1 ringgit. 99 cents, 98 cents, 95 cents, then you only confirm this is stage 3, then you only expect stage 4 is coming in. But in between this space in 1 ringgit and 1 ringgit 20 cents, let's say you break out instead of breakdown, you go higher, 125, 130, then you this whole stage 3 that you think you back to stage 1, and this one, the next stage will be next 2. This is how we interpret this.
Yeah. Okay. The next question is by Ho. Catching pullback or breakout, which of this strategy is more suitable for part-time trader? Which method gives better trading edge?
Trading edge basically is based on your risk management, but pullback is a breakout and pullback is a very subjective way in my opinion. Okay, for example, 1 ringgit and 1 ringgit 20 cents. If there's a breakout on 1 ringgit 20 cents, we'll never know the next day is continue to go higher or continue to pull back. But of course, sometimes people prefer a pullback is go back to 1 ringgit 20 cents or 1 ringgit 118, 117, for example. Then is a pullback. Usually pullback, we like to use moving average line guidance, 20-day or 50-day moving average line. Then you can accumulate in the pullback level. If you prefer both of the way, what I advise is always buy 50% of your position when there's a breakout. If there's a pullback, then you only affect the other 50%. There's a one sort of strategy that you can use in terms of technical, in terms of position yourself in the stock market. Yeah.
All right. Now, Stephen Fu would like to ask the next question. Now, he remarked that Warren Buffett said, be greedy when others are fearful. So shouldn't we be buying at stage 4 instead of waiting until stage 2? So by then, the price would have spiked out. What do you think?
I think he is right, but we definitely can use stage 2 to monitor it. Like as I said, are we in the bottom right now? Now is a very interesting juncture right now, especially a US market. Because if you look at the US market right now, it recently break down from this June low, which is 2-month low ago, the new low. But in this 2 to 3 weeks time, if I see they can recover back, especially for Dow Jones, it can recover back to 29,000 or 30,000, then I will assume we have a temporary low. Okay, that is the major indices. What we should do is we top down, we also bottom up. Okay, we need to spot the group of company that are very strong, that usually is hovering or flirting near to its 52-week high level, and we need to search the group of this kind of counter. For example, give you an example for 2020 when COVID kicking in. Actually, most of the glove they are doing very near to the 52-week high, and eventually they break out together. So we need to spot the group, not like we are bottom fishing everything. Usually we don't use technical to bottom fishing to catch the falling knife, we call it. We need to see the right base, at least a 1 to 2 year base. When there's a slight breakout, then is the time is bottoming really. Then you can start to invest in the right group. Yeah.
All right. God Lai would like to ask, how do we prevent fake or false breakout from stage 1 to stage 2?
Unfortunately, I will telling you that we can't predict because it's happened all the time. That's why we need stop loss to protect the strategy. So for guidance, 10% stop loss will be the ideally, which means if you buy at 1 ringgit breakout point, then eventually the share price went down to 90 cents, below 90 cents, then you have to take a loss and get out. This is one way to protect you, especially false breakout actually are very relevant linked to the market situation, especially the environment right now. If the market very volatile, which is right now in inflation problem, rate hike problem, then false breakout usually happen quite often. That's what we do is if you are a trader, we adjust the risk to reward ratio. Instead of looking at 30% gain at 10% risk, you need to adjust to 5 to 6% risk and 12 to 15% return. This is how we try to manage. Or you don't invest until you see a very clear breakout and things getting stable. Then you only see, or you look for some cousin sister stock, which means the same industry, same segment stock, they are moved together, break out together to get a lower risk entry point. Yeah.
Okay. Stephanie would like to ask your view about volatile, since that the oil price is high and there are increase in capacity. So what do you think about this company?
Tonight we don't talk about individual stock, but well, stock is not under our coverage. But yeah.
Okay. Yeah. So not under your coverage, yeah?
Not under our coverage.
Okay. The next question is, can technical analysis detect stock crash before it happens?
If the share price going in from stage 3 and stage 4, basically they will take down the 50-day and 200-day moving sign. It's good enough to as a warning sign. Yeah, I would say yes. Yeah, especially technical analysis, they can spot. Just use a simple 20-day and 50-day moving sign is close below, or instead of pointing outwards, sloping outwards, they are sloping downwards. Then you just need to start to what?
All right. Guang Hui would like to ask, do you have a list of a stage 2 stocks that you can share
Join
with
us, open account with us.
Yeah.
Then open account with M Equities, and we share our stock radar every day. Yeah, and we also have the stimulus portfolio that I try to put in all the stage 2 stock inside. Yeah, and we also have fundamental reports for our fundamental teams.
Yeah, fantastic. So if you haven't had an M Equities account, you may reach out to them, reach out to Kalin and the team to open a trading account. All right. So yeah, glad that you like the answer. Okay. So how about ATech? Is this company at stage 2 yet? So that's his next question.
Personally, I think it is, especially they announced the quarterly result, but you see there's a resistance near to a 2 ringgit there. Unless we see a strong breakout from 2 ringgit, then we only have a confirmed stage 2. But right now, I think they are entering to a base building. So I think overall, I think it's still okay for AirTech, Aerials Technology. Yeah.
All right. Yeah, the next question is, do you use moving average on daily time frame or weekly time frame or monthly time frame?
I always like to use default. Just use daily chart. Don't need to use weekly or hourly. Use daily chart. Use 20-day, 50-day, and 200-day. As simple as possible. Yeah.
All right. What do you think Dow Jones and FBM KLCI, like which stage are they in from a technical point of view?
On a technical point of view, basically Dow Jones is stage 4. Okay?
Stage 4.
Yeah, and KLCI also in the stage 4. But in the longer term, actually KLCI has been sideways in 1,300, 1,400 to 1,600. But currently at this juncture, I would say in the stage 4. Yeah.
Okay. So you would like to ask, are moving averages lagging indicators?
Yes, it is. That's why we use it as a reference for the past 1 month. What's the average price? So it's not really matter that which indicator you use it so you can make money. Okay, it's just a tool, like a doctor use a tool to help you to analyze what kind of message that your stock is trying to tell you by using price action. What kind of message that indices, the major market try to tell you. Yeah, we use. It's okay to be a lagging indicator.
Okay. The next question is by Pang. What is the significance of price matching at 4:45 p.m. before the market closes? How is it done?
Oh, there is very technical questions that you can email to Busa. This is a Busa rule. Yeah. It's just a rule. Just leave it. Yeah.
Okay. It's very technical. It's pre-closing, okay?
Yeah.
The next question is by Mohammad Hafiz. Is it possible to determine the stock cycle by using only the technical analysis without fundamental analysis?
For me, I don't recommend. I always say that you combine fundamental and technical. Even you are pure technical, you need based on price action. If you go for some smaller cap, actually your risk is pretty high. As I say, this theory, the foundation of this theory is that you need to combine the fundamental and the price action, because you need to spot the company earning and you want the institution or the fund manager to like the stock and let them buy first. Okay, the key point is let them buy first. At least few fund manager to buy it first. So you have the price action confirmation. Then as a retail investor, then we only join the boat, join the rally, way that way.
Okay. The next question is by Tommy. What happened to Tenaga? No, it seems to have 50% drop in the past 5 years.
We still have buy call. Again, open account with us. We have a whole fundamental. We have power analysts that whole fundamental report on it. Yeah. You can read our research report by opening account.
All right. So if you are still not a M Equities client, yes, please reach out to the team. Yeah. I think Lew, just now you talk about base 1, base 2, base 3, right? So Gan would like to ask, how do we judge which rectangular shape is in which base?
We don't use rectangle to justify the stage. We use the level to justify the stage and use moving average line to see the stage. The rectangle pattern is just another analysis of the stage 2 itself. If you purely on the basic stage analysis, you just need to use the moving average line, the share price trading above the moving average line, and the moving average line move higher. Yeah, it's that simple. No need to really look at the rectangle, especially to a new high level will be the early stage of stage 2. So for the past 10 years, this share is never have a trade above 1 ringgit. Then right now they are doing 1 ringgit and 5 cents, 1 ringgit 6 cents, or 1 ringgit 10 cents. Then it could be a signal. Usually at the time your share price you're trading above all is 20-day, 50-day, 100-day moving average line. Yeah.
All right. So let's do one more question, which is so in your opinion, Ms. Lew, which sector do you think will boom next?
We are still waiting for the silver lining sector, to be honest. For currently, we are advising our client and investor to be more defensive, people to be more cautious. As I say, when you have the problem is we don't have a single strategy to capture all kind of market situation. That's the problem. That's why sometimes we need to shift. So right now, we don't see the silver lining sector right now, but financial seems the one that are stronger hold out with dividend play. And some of the stock, as long as they are still trading near to its new high or all-time high, actually is quite safe. For example, some of the IPO stock, new IPO stock. And in terms of sector, unfortunately, so far we don't have. Yeah. In terms of technical.
Yeah. So I think this year only IPO or financial services they are in positive.
We do buy call fundamentally. We do buy call on a few sector like automobile. Actually, they are doing pretty well, like Burma, MBM, resources, they all. And we have buy call on banking. Definitely, we still like oil and gas. Oil and gas, we like typical some crucial segment. They are direct benefit for the high oil price, like Hibiscus Petroleum and FPSO players such as Inson, the market leader. We also like Dialog. So from a fundamental view, actually we still have 7 sectors they are overweight, which means we are positive on it. Yeah.
Okay, understand that. I think let's do one very last question by Stephen. Now, different stocks will encounter different time frame to complete from stage 1 to stage 4. So typically, how long on the average does it take to complete from stage 1 to stage 4?
Usually we don't really count or care about how long it takes stage 1 to 4, but we do, from speaking from experience, we do care about how long is the duration for the stage 2. Usually it's 2 to 3 quarters. As for stage 1, 3, and 4, unlikely and very hardly to make a judgment. As I say, stage 1 usually they need time to solve their own problem for the company. But as for stage 2, the earning momentum, usually you will see a strong one in 2 to 3 quarters, and it could be start to slowing down, speaking from personal experience. Then eventually, if they can pick up, then the share price will continue with stage 2. And just use daily chart. Yeah, don't need to go for weekly or monthly chart or hourly, so complicated. Yeah, daily chart will do.
All right. So, ladies and gentlemen, you just heard from Mr. Lew Chee Hao, who is the head of retail research of AmInvestment Bank. And for those of you who haven't become an Equities client, you may reach out to M Equities to inquire about account opening, where you can have the exclusive access to the research reports provided by the research department. So thank you everybody for tuning in to this webinar that's titled One Glance is Worth 1,000 Words, brought to you by M Equities in collaboration with Bursa Malaysia and managed by our company Wealthford. So this is Xuan Chu signing off. So see you guys in the next webinar. Bye-bye.
Thanks, Shane. Bye.
Thanks, Chee Hao.